All right, welcome everybody to another episode of the Veterans Wealth Podcast. I started this podcast beginning of the year because we had a lot of veterans that were trying to find ways to transition either out of the military or they had gotten out of the military and still haven't figured out how to transition well into business or a career outside of the military. So today I welcome Emmett Dempsey, who is with me today. Thank you for being here with me today.
Thank you for having me.
United States Army captain, served 4 years, a year in Korea, and the other 3 years here in the States at Bragg, right?
Yes, sir.
You said? Awesome. Yes. So thank you for your service, first of all. And so I want to talk to you a little bit about Emmett. You served 4 years in the military, Army captain. You decided to get out, right?
Right.
So first, why'd you get out?
What I got at the time, I didn't see myself being a career officer. It just wasn't my thing. It was basically serve my time. I love my soldier time. It's just as you know, officers don't get a lot of soldier time. Only when you're a junior officer, and then you come on staff, and then you're just you don't get to be a soldier. Yeah. And that wasn't a career I wanted. Okay, awesome. And then once you transitioned out, you went into the corporate world. That was like stop number one. You went into a medical company and you did the corporate thing. How long did you do that for? I did that from about 3 or 4 years. I went to Liberty Medical Supply, the Wilford Brimley commercials. Do you have diabetes? That was a major employer here in St. Lucie County, or at least they were. So that's what I did. Awesome. And then eventually
you became a loan officer in 2007 before everything went to shit, right?
Yes.
And so, everybody was becoming an LO at that time, right? But a lot of those LOs got out of the business, went to work at TGI Fridays, or went to jail, or because there were a lot of those. And I know you were in Country Ride, so you saw a lot of that.
I did. I did. Yeah.
How did you survive this? Like, market crashes, everything dies. You're new to an industry. How did you survive forward progression on that?
No, I mean, I just, focused on helping clients. At the time it was guidelines were this, back then it was the old 228 loan and 500 credit score stated income. That's what the rules said. Okay. Here's your script. Move on. I guess this is the rules, right? This is, come from the military, you have orders. Okay. You can do this, this, and this. So I did that. And then in August of 2007, they said, okay, we don't do this anymore. I'm like, okay. So you just improvise, adapt, overcome, and move something else. And then this shut down, and then in 2007, Bank of America bought out Countrywide, and then we transitioned, and then we started over Bank of America, and then you started going to FHA. FHA was a loan that was pretty much dead during the whole subprime crisis, and then it kind of revived it to kind of fill in the gaps.
Right.
So, everyone started doing FHAs again, and it was just figure out you were just getting our footing. And then what knocked a lot of people out too was the licensing. So some states are worse than others because you have to have credit checks. So everyone went through the crash, lost houses. Me personally, so I've been there too. So everyone had to get licensed. There are some people that could not get licensed because if they had felonies, things of that nature, they just couldn't get licensed. So I actually really like the licensing because I have to be licensed and have continuing education. And a lot of people don't know that your bank LOs don't have to do that. They don't have to be licensed; they're just registered. So I believe it brings a level of professionalism. But no, it's just adapting to what products were able to be offered, and there are certain things. They had the cash for clunkers. What was there? The $10,000 incentive was there for a hot minute, and then they had the refinances of Fannie Mae owned homes. So it's just figuring out what was available to be done, and usually they came up from up high, but we were figuring out how to offer those solutions to clients. And it's really no different. I mean, it's a different set of tools now. So I would offer better tools with better rates. And I always tell this story, when I started in 2007, 7% was all the rage. And that was a great rate, 7%. Now I'm like 7%. Oh my gosh. Now and people forget 18 months ago, I was selling 5%. So now it's like, oh, my rate is not in the twos. This is ridiculous. So it's just having perspective.
Yep. It's funny because I was listening to a Zig Ziglar audiobook the other day, and he was talking about a sales scenario. And he says, if something great is happening, like for instance, a client can get an 11% rate. And I was like, oh my God, and the book was written years ago. So you get it. But if you were to tell somebody, 11, you can't even tell somebody 11% at hard money now. So
I know.
let's go. It's insane. All
It's
right.
crazy.
So you transition in this world, you become, superstar LO, and thanks for being an advocate today in helping veterans understand that they can do it too. Because we do this show because there's a lot of veterans that have come up to me or within the groups that we're associated in and have said, look, man, I'm getting out. I just don't know what to do. And I can actually, I can relate because when I got out, I was an armorer. I was in the weapon systems, right? And so when I got out, I had this joke. I was like, well, it's gonna be the Bloods, the Crips, or the Miami-Dade Police Department, And so because they're the only ones hiring with my skills, And then I found out that armorers and weapons techs in police stations make like nothing. So I was like, okay, well then I guess I got to be a cop, right? And then I realized I didn't want to be in a uniform anymore, which is why I got out, right, and got a degree. So there's so many things that goes through a veteran's head about how they want to progress and how they want to succeed. And I love something that you said that we hear all the time: adapt and overcome, ladies and gentlemen. There's opportunity, and there's people like us out here that would be happy to have a conversation with you on how you could do what you need to do to be a winner in this world, right? Okay, so now I want to get into your business with you and how we can educate our veterans. All right. So you said something to me earlier that struck me: veteran-facing companies.
Yes.
Okay. And how they're not always the best option. And let me tell you, I got veterans out there that will swear. I'm in real estate, right? So I got veterans out there that will swear on Navy Federal, swear on Veterans United, swear on USAA, swear on these companies that have created the military niche and have made themselves and put themselves in the position of power within the military community. Talk to me about this.
Yeah. I mean, being in the military, its own little enclave, and those companies rule that enclave. And look, I have USAA insurance to this day. So ever since I was a cadet, and they do a lot of really good things. Right. I'm just saying, do your due diligence, because the way that the mortgage industry is structured, basically your conventional loans are for your really good credit folks. So there's not much difference in interest rates on those. But companies make their money on government loans because they're insured and there's more juice on those loans. So VA is part of that section. So that spread will get more and more, and it'd be different from lender to lender. I'm just saying, do your due diligence. Get a loan estimate, which is the document that we're all bound to, and compare and contrast on your own. But I am a mortgage broker. I own a mortgage brokerage, and I believe that wholesale and the mortgage broker channel is best for veterans. That's what I believe. That's why I opened my company last year in the middle of COVID to do that. Versus your correspondents or your lenders or your Rockets, things like that. So just do your homework and see what every loan scenario costs you.
Yeah, and don't go blindly into the light, right? Like and I think that's I think for most people, that's a normal thing. Like, let me get a few quotes. Let me figure this out. But for veterans, it's, what are you talking about? I've been with Navy Fed since I went to boot camp. That's where my first direct deposit went. I was forced to open a bank account there, guys. I remember going to Paris Island and being forced to open a Navy Federal account, and being told that that's what I was going to do.
Yeah. I mean, and Navy Federal has some really cool programs, that I don't have. I'm just saying, just do your due diligence. I'm not saying they're all bad, and some days, they might, price better. I mean, you never know. I don't control their rate sheet, but I just know I'm going up against them in the trenches every day. The gulf of what they're quoting versus what I'm quoting, I'm like, how is this even possible? So, that's why I like being a mortgage broker, able to offer that, the ability to help veterans save money when they're buying a house.
All right, so talk to people about the VA loan, because I've had a few MLOs up here who have talked about the VA loan, and I like to hear everyone's perspective on it. I'll tell you that when I first got out of the military, even after 9 years of service, no one had ever spoken to me about the VA loan. And I'm talking about, I've lived in North Carolina, I've lived in Virginia, I've lived in Maryland, I've lived in California, and then the overseas stuff. But in all those places, had I known about a VA loan, I may have bought something. I may have started to create some wealth for myself. But the only financing class I ever got in the military was math for Marines. It was a requirement to become a corporal, So talk to our audience about the VA loan and the benefits of it.
Yeah, I mean, I think the VA loan is probably the best loan that I do. It's the only pure, no money down loan. It has its strengths and weaknesses, obviously, and there's certain perceptions that the real estate community has as you as a realtor. You might see that some listing agents view veteran loans as somehow lower than conventional, and that's a problem that we're fighting. Whereas because it has an appraisal process that's unique, it doesn't go through the appraisal management companies like conventional loans do, but veteran loans default at much lower percentages than conventional loans do. And so it's a backdoor form of discrimination when a listing agent says, I don't want that VA loan, and then just kick it out of hand. So just, that's something that a lot of listing agents need to take a look at. But the VA loan itself, from the veteran's point of view, it has, insured rates. It does have a funding fee. But it's a way for you to access home ownership, one of the lowest out of pocket that you can.
That's amazing. And so for veterans veterans or active duty that want to use their VA loan, what's the minimum requirement from them? Like in time and service, what's the deal?
Yeah, I mean, time and service. I mean, generally, don't quote me on this because off the top of my head, I think it's 4 years active, but if you're in combat, I think it's automatic. And there's certain reserves and National Guard, and also surviving spouses. And I don't want to quote something that's not true. That's all online. And I can get that for you. But generally, whenever there's a question, I just go into the VA system and find out. Because even I've had folks who thought they were qualified or weren't, or vice versa. It's like, I don't think I have VA loan. And it's like, yeah, well, you are. So it's just I let the VA give me that determination based on their DD-214 and service. But generally, it's having, if you did a normal term of service, like most, first term enlistment, you'll be eligible unless you got out the day after boot camp or got kicked out of boot camp or something. So you have to have served in some capacity.
And it has to be an honorable separation.
Yes, honorable session. Yes. Yeah. So okay. Honorable discharge. So yeah. So we will figure out your availability, and that'll qualify for the VA loan. Okay.
Now, let's say I'm stationed in, and I speak in Marine terms. I know you're in the Army. Let's say I get stationed in Camp Lejeune, North Carolina, right?
Right.
The armpit of the world. And I buy a house there using my VA loan. I'm stationed there, let's say 3 years, right? Mm-hmm. And now Marine Corps says, hey, man, we're moving you to Camp Pendleton, California, right? Mm-hmm. We're going across the country. I'm moving you to a unit over there. Do I have to sell this house or refinance it if I want to keep it to reuse the VA loan in California?
No. There's something called a secondary entitlement. Now, you can't buy as big of a house out in California because it's cumulative, based on whatever other county loan limits are. Now, and everything, it's on a case-by-case basis. This is speaking in generalities, but the national conforming loan limit is $548,250. And if you think, you can have VA loans up until that. So if you have two loans that are 200 something thousand, that's kind of how it works. But again, what we do is we pull your certificate of eligibility, find out how much entitlement you've used. And, what that means for a second house, you just have to put more of a down payment down, but it's only 25% of the difference. And when you compare to a conventional, which is generally 5 or 10% down, or another FHA loan, 3.5% down, it's still less. And the biggest thing about a VA is no mortgage insurance. Like mortgage insurance is huge on a FHA loan of 0.85%, whereas VA is zero, no matter how much house you buy.
It's huge. That's huge. And I asked that question because I remember I met someone years ago, and this was after I got out of the Marine Corps, which pisses me off. I wish he would have told me this before, right? Mm-hmm. But he said when he was in the Army for 14 years. And he had been stationed in, say, 6 different places. He told me a story a long time ago. He bought a house at each and every place he went to. And then when he got out of the military, he moved to Southern California. He sold all his properties and he bought a multifamily in California. Now, I want you to imagine that he got out of the military maybe 30 years ago. So imagine what that multifamily in Southern California is worth now,
Yes.
And he retired on that, believe it or not. he created a life for himself that he was able to retire in general. Guy hasn't worked since his 30s. Okay. And he bikes every morning. I think he's in his 70s. He looks 45. You know, he's not out there stressing out every day. This is something that every single person can do.
They can do. Yeah,
right?
Whether you continue your VA entitlement or you refi the very first one to release some of it, you know, it's just, you know, shuffling it around, and you can buy multiple properties if you stay in a career. You can definitely do it that way. You just have to have a game plan.
What's one massive tip that you would give veterans in home purchasing?
Do your due diligence. You know, so one of the programs I use, it's called Mortgage Coach. You know, a lot of times they'll just spit a fee sheet at you. Hey, here's your fees. And a lot of times my industry gets so rate focused. One of the first things I do is what's your rate? And I try and almost deprogram them from that programming. And that's what it is. It's marketing and advertising and programming, you know. And look, I market too. I get it. You know, there's certain things, certain hot buttons and searches that folks will key on. And mortgage rate is the number one search term on Google. That's just what people want to know, because they want to not ask questions. Well, I can give you a great rate, but how much does that rate cost you? And then, but what are your goals? And I always joke that the answer to every mortgage question is it depends. Depends on what you want to do. Depends on your goals. Depends on your family's goals. Are you going to be here?
There's so many variables, right?
Yeah. So I always say, okay, well, how much do you have? How much money do you have? X. You know, how much do you want to, you know, put down? How much do you want to pay each month? Why? That's what I focus on. It's like that's how we live month to month. You know, and then when I hear, what's your rate? And I'm qualified to this, and like, okay, let's slow down and kind of figure out what your goals are first, and then here's a range of options. So with the Mortgage Coach program, and if you go to on my website, I have a link to a buy versus rent, and I show them like basic questions. Why are you buying a house? Not just because someone told you could. Let me show you how you build wealth with it, just by making your payment every single month. You know, so it's called amortization. You know, where appreciation is just the cherry on top. So let's chat on that for a minute, because your number one tip is to do due diligence. I would say maybe we tell people stop renting and buy, yes. Right? Mm-hmm. And so you touched on that right now, buy versus rent. Mm-hmm. You know, what's the number one benefit to buying versus renting? Number one benefit, like I always say, that you got to make a payment anyway, don't you? Yes. So you do. So by the act of you making a payment, it's called amortization. Straight loan pay down. Now, everyone knows that at the beginning of a 30-year fixed mortgage is mostly interest. Yes, we know that, but there's some principal too. So, and I have, you know, a buy versus rent for $300,000 purchase price, and roughly it's about $300 a month of equity every single month. And over 5 years, you know, that's like over $30,000 that you have just an equity pay down with zero appreciation. What if the market crashes? And I hear that all the time, and that's all the conversation. Supply and demand will prevent that, but still, you're building an asset. You know, that by equity pay down. I just tell them my story. The house I'm in now, 2 houses ago, I bought for $79,000, sold that one, bought for $165, and then bought on the next one. So it's just that island hopping campaign, just like you're talking about with the veteran that you described. It's just using, and only because we're just making your payment. It built that equity, so we had something to roll into the next one.
Guys, we're sitting here teaching you how to build wealth, ladies and gentlemen. Please subscribe, follow Emmett, follow me. You know, share this story, let everybody know. This is huge stuff. Now, for the entrepreneurial spirits, what's the number one tip you would give to somebody separating from the military who wants to be an entrepreneur?
Well, that's a broad question. You know, I guess I like it to Gary Vee. Basically, he says just learn. He's like, even you got to work for somebody for free and learn. You know, so it's just learning that stuff. I know from 07 to 08, I was doing a lot of learning. You know, I wasn't making a lot. You know, just learning how the mortgage business worked and worked up to, you know, to retail. I had a branch, and now I have my own mortgage brokerage. So it's just that learning curve, and it wasn't always easy. 07, 08, 09, those are some dark years, but I think those really, you know, formulate your skin and where you've come from. So, and, you know, for the new folks who haven't felt that pain, it's always been sunshine. You know, sunshine, the darkness is right around the corner, but I know how to handle it now. So I welcome rising rates.
Okay. Awesome, man. Well, thank you very much for doing this podcast with me. We broke right at the 20-minute marker, which I really absolutely love, because that means we'll get everybody's attention the whole dang time. All right. Again, thanks for doing this with me. Lots of great information that you've provided, and I appreciate that from the bottom of my heart. This entire podcast was designed to better our veteran community. So, and I think we did that today, and I appreciate you for doing that with me.
Thank you. Thank you for having me.
All right, brother. Thank you.
Thank you.